Who would have thought that the bear market was way easier to trade than the bull market? This has been a screaming run, probably one of the most hated rallies that we've seen through Bitcoin, cryptos, and the stock markets. For many countries around the world, Bitcoin is at near all-time highs. And of course, for the almighty US dollar, we've still got a little way to go, but it's getting very, very close right now. So this is leading to that massive question, which has now become very popular. Could we be seeing a left translated cycle? If you don't know what that means or want to find out, stay tuned to the video, hit the like and subscribe button. We cover macro cycles here on the channel. Of course, it is your home of macro cycle analysis. We look at Bitcoin, crypto, stock market, and the biggest markets in the world, the real estate market, as I've got for you in today's video. Links, as always, in the top of the video description, we have a premium sale going on right now for TIA Premium. Check that link out. Emails will be coming out to you very, very soon for the coupon codes. All right, let's kick it off with the beginnings of the macro cycle. Before we get into Bitcoin, we need to start to understand where we sit. Of course, if you have been a subscriber, you know that we're looking at the everything bubble. Things are going mental, but we need to cover what's going on out there in the economic landscape. The point being with the interest rates, what we had seen in the past, and we alluded to this on the channel, is the possibility of interest rates not getting cut and potentially pausing for longer than the market expected. Remember, these are the interest rates here for the US. If you can see here on the side, 5.5%. They were expecting a cut like this, basically a cut every single meeting throughout 2024. This has slowly shifted to no cuts or less cuts. And like we can see for March coming up next month, less than a month away, no cut. The following meeting in May, no cut. This is essentially saying the market's going to stay where it is. They're looking for a cut in June and then a pause in July, a cut in September, a cut again in November, and then a pause in December. So essentially just 3 cuts, if I get my numbers right here. It's definitely hard reading the US dates. Moving on. So essentially looking at the cuts, they've basically drawn back their expectations thinking, well, there's not going to be all these cuts. We're going to pause now because the markets have been looking stronger than the masses and the mass media and the mass analysts and your typical analyst and media outlet out there had expected. They all were expecting recessions and we didn't see that. And now we're seeing the stock markets, of course, push higher. We're also seeing the real estate cycle push a lot higher. So if you're familiar with this, great. If not, it is your 18.6 year cycle. It has been as close as we can get to a crystal ball in the markets, looking at the macro cycle here, getting really nice deep into that low and watching the markets come out of that low in 2020. Sure, there was a pullback in 2022, but it was higher than 2020. We're speaking specifically here of the US stock markets and of course real estate as well. This is where the most money is, so we can get on to Bitcoin and the left translated cycle, the possibilities of that, and what if we see it, what if BTC does hit that price and basically fall from that point. So we want to update that as well. So with the 18.6 year cycle, I've done an update here on X. Go and check that out, link in the video description, and make sure you bookmark this so that you can follow the journey into the peak and then the subsequent collapse. We're still looking out for a big collapse, but there's a lot of money to be made in this period. It's going to get crazy. There's going to be a lot of things going on with real estate as well. So bringing us back to these interest rates and how these prices keep going up. They had the pause. Real estate keeps going up. Stock markets keep going up. And the expectation is that we're not going to see cuts until June at this stage. This can always change. These numbers can always change, remember. But essentially, markets keep going up at this stage. Now, looking at US national home price changes, this is a plethora of data here, going back to 1891, thanks to Charlie here, essentially looking at those home prices. I know that there are still plenty believing that we need to see a collapse in house prices because they're too high. I'm with you. I think the prices are ridiculous. They are insane, but the market doesn't care. It doesn't care if you call it insane and this has to collapse and all that sort of stuff. We're just looking at the prices here. And we also look at the Case-Shiller Home Price Index, which also goes up at that point. It's also heading up. So looking at national home price changes, 2022, 6% nominal increase, negative 1% here. 2023 was an up year again, 6% up, and real was 2%. Either way you look at it, it is still up. Look at the negative years though. You can see the signal here. So this is the big one. Going back to your 18.6 year cycle, the peak before the collapse here in 2011, so the bottom, this is for real estate and the economy, not the stock market. Remember that. This peak was somewhere around 2006, okay? So 2006, the peak there for the economy and for real estate. Check this out on the prices here. You can see that 2006 basically started to roll over from this phenomenal run to the upside that it had for many, many years. Then in 2007, when you still had a higher top for the stock market, real estate was rolling over at that point. That's potentially not confirmed, obviously plenty of time to go. And the hardest thing here to do is to try and to forecast these markets in advance. Because in 2007, the prices started to roll over, even though the S&P top, and for many markets around the world, the top was later in the year, around October. So basically looking at your Q4 in 2007. Of course, we all know what happened in 2008. That was the big one. And then 2009, 10, 11. And that's why we look at the bottom of this cycle as 2011, 2012, and not what many people think being 2009, because real estate was still going down there, bottomed around this period, and then started to head up. And we've been on a mega charge ever since that point. Another thing here, in the short term, so just quickly flick into the short term, smart money, dumb money, both are in crazy times. They're both very confident. So they're buying up here. And the last time we saw this, short term wasn't so great. So last time we saw both smart money and dumb money buying up with confidence. The short term didn't have great results. 40%, 60%, 60%, 55%. 1 week, 2 week, 1 month, 2 months later, you saw a correction on the stock market. Does it have to happen again? Well, the stats say it doesn't have to happen. There was a 40 to 60% chance that you would see a positive result. Therefore, you'd have a 60 to 40% chance you'd see a negative result. Nonetheless, you still saw later the markets head up from that point, 80%, 70%, 12 months later. And that's essentially what we're still looking at here with the overall macro cycle. Diving deeper into more data around the S&P, because as you will see, we're going to use this in just a moment, looking at the Bitcoin accumulation, Bitcoin bull market, when things hit that new fresh all-time high. This one here from our good mate on the channel, Seth. He's got data here for 28 data points looking at when the S&P reaches 12% above the 200-day moving average. So your 200-day moving average, when the market is 12% above that, what typically happens? We can see at 92% of the time, 1 year later, the market is positive, still positive, with an average return of 13%, a median return of 13%. 6 months later, 93% of the time, it's still up, 7% and 6.5%. And then you can take it all the way down to this shorter term stuff here. 2 weeks later, not a great result, 43% up. Maybe there's a bit of a change happening here in the air. Maybe it's still going to be what we're looking at when it comes to these slow grinds up, because essentially this is a weekly chart. And you could say, well, if a signal occurred here, the following week was negative, and that's a negative 0.5%, which would show up here if you had a 1 week here, so 2 weeks later. Essentially, that's what you're looking at for the short term, and then it starts to grind higher, which is what this data is suggesting. Now that the market is 12% above its 200-day moving average, you will get short-term corrections, typically like what we've seen in the past, and then that grind higher. There's still nothing suggesting that we're going to see some big pullbacks, anything double-digit wise, but like we've covered, with this grind up, you typically see those single digits just keep grinding and grinding, and it just sucks in a whole lot of people. That continues to push these markets higher and higher within our 18.6 year cycle. So that's it for the S&P 500. The NASDAQ is very similar at the moment. This line here is just measuring the COVID crash low to the peak in January 2022 to see how fast we're progressing compared to where we were with that huge amount of money printing and stimulus, because we don't have that same sort of money printing going on right now, but we have a lot of credit being created. That is a big one that comes up a lot. I see that from comments saying, how can these markets go up if there's no money printing? Money printing comes in many different forms. One of those forms is creating credit from the bank. So the banks create credit, they ease the lending policies and allow more people to take out bigger and bigger loans to be able to afford these properties. That's how you get the 18.6-year cycle. This is why it keeps happening over and over again. It goes in tune with the credit cycles as well, which is essentially your economy. And of course, well, that's included in real estate prices. People love to start to speculate on real estate prices, especially when you get closer towards the end of this very long cycle here, this 14-year expansion with a 4-year correction. And we're at the end of that stage now. The scariest part, think about those peaks in Bitcoin. Think about what's going on in Bitcoin right now as this thing starts to skyrocket and you think, when is there going to be a pullback? I'm never going to be able to afford one Bitcoin. That is the same thing that is happening right now and will happen even more so over the next couple of years through Australia in particular, with crazy prices on real estate, the US as well, with your in-demand areas. Remember, in-demand areas, some areas, not the whole entire place is in demand, but those in-demand areas are going to keep skyrocketing and people are going to say, how am I ever going to get in? I need a way to get into this market. That's where the banks come in, create that credit for you, slap it into the market, keep peaking in these prices, and then things get really bad later on. I hate to say it, but that's later to come. Hopefully you are not part of that craziness with the cycle and the masses just getting caught out. So S&P 500, before we get into BTC, looking at the Bitcoin cycle overlaid with the S&P 500. That's what I've got here in these yellow boxes. So not to have too many lines on the chart here. The yellow boxes show the different stages of the cycle. So I've indicated these as the bull market being when Bitcoin breaks into a new all-time high. I know typically we measure it from the bottom, but this is just from that all-time high. The bear market is basically the pullback on Bitcoin from that high to that low, and then the accumulation is from that Bitcoin low, that accumulation, until it breaks out into that new all-time high again. So this whole period, that would be your Bitcoin accumulation. Within that Bitcoin accumulation period, what we've noted from the S&P 500 is it typically breaks out twice. So far, we've only seen one breakout into a new fresh high, in this case, a new all-time high. The first time in 2012, leading into that peak, that bull market of 2013, the S&P broke out into a fresh high once, corrected, and then again broke above that previous top and corrected, and then you had your bull market. Next cycle was 2015, 2016. You can see this was the bear market. That is obviously the market still going up for the S&P 500, but Bitcoin was in a bear market. It was going down through 2014 and just bottomed in January of 2015. Here it is. If you've missed that part of the cycle, there's 2015 low, hit another low August, and then started its rally out. Essentially, the S&P broke to a fresh high, corrected, kept going, and then broke to another high before a correction. So this high right here on that white was higher than this whole period here from the first breakout. Corrected, and then away we went. This was basically the Trump election. Bam, bull market, everything's going crazy. Note that the S&P doesn't have to go into a massive bear market like Bitcoin does during that period when Bitcoin's going down. Essentially, it's just going sideways, trying to consolidate. Could also be some profit taking, and positions are getting formed for the next run. So next run occurs, Bitcoin accumulation, breakout here to a fresh high point, correction, little correction, kept going, had the big one here, that's the COVID. Big push to the upside again, another breakout of that top. So there's our second attempt at a new all-time high. And by this stage, you can really feel that the bull market is getting going. Things go crazy. There's your pump up into the peak. And that's our most recent bear market. So we're into this accumulation phase, which we can now drag this up a little higher. And we can put a line from the all-time high to the current prices of the market where it's broken out of that. So what we have seen in the past is a pullback. Like you can see from the previous accumulation, it was only slight pullbacks, nothing too major, had another run up, COVID crash here. Doesn't mean we have to get a COVID crash, but it could be a little more significant coming back to test those tops and then push higher again to come back and push to a new fresh high. In terms of where we currently sit, we haven't seen any sort of correction yet. We're still early days breaking above this old all-time highs. We just did that in January last month essentially, and then we're still pushing higher. So do we get that correction? That's yet to be determined. Unfortunately, I don't have that crystal ball. I'm just following what the market's doing, looking at this particular chart and our swing indicator. So we don't have any turn of the swing indicator yet to come down. One thing to note that I'll bring up for the Bitcoin cycle, for this left translated cycle, is the monthly swing bottoms. Note how these monthly swing bottoms were all intact using our Gann swing indicator here. You can see that the market pulled back, put a higher low in, that's where you can start to raise your stops so that you can keep following the trend, even though things seem way overheated, even though it seems like it can't go up any further. That's where you can keep up with the market. And then when it turns down, that gives you an exit point. So something predetermined and makes life a little bit easier to sleep at night when these markets are just skyrocketing. Like you can see here, basically they kept coming straight down. There's your swing bottoms. And then you had a breakout and you can keep positioning your stops underneath these lows on the way up. The S&P going into new all-time highs was yet another huge signal on the back of our already big signals from the lows. As I talked about before on the channel, plenty of videos at that time explaining why this was probably most likely going to be the low area, and then we would see prices skyrocketing from that point. Now it seems like everyone is talking about that like it was so easy, but remember at that time, back 2022, 2023, most didn't believe it, especially with a banking crisis. Now we find ourselves 4 green months up here on the S&P 500 in new all-time highs. So where does that leave Bitcoin? Well, it leaves us in extreme greed right now for the crypto space. Yesterday, extreme greed as well, and last week again, extreme greed. So we're watching this as a bit of a pullback here, and we really didn't see much more of a pullback throughout February and have pushed higher to the 80s. Now from the past, the 80s have been a relatively good place to see a pretty decent scare all the way back down to roughly around that 40 level on the reading. Getting back to down to 40 would put us into fear, not extreme fear, but I don't think it needs that extreme fear to really reset that market sentiment. So we've only seen it push slightly back under 50, which is essentially neutral right now, pushed again higher, got to the 80s, and we've seen almost higher lows every single time on the market sentiment. Something's got to break. We don't have that signal yet, so just keep following the chart to the upside. That's where we currently sit with Bitcoin right now as we look into the left translated cycle. So there are a few possibilities depending on which style of analysis you like to look at. Some could be the clean, clear double top. Your double top price is coming in at $69,000, which was from November 2021. That could be a clear point of resistance. Then you just look for the pullbacks. The main thing on the pullbacks is you don't want to see it go below the 50% level. It's a long way down if the top is $69,000. I don't want to say that it is. We're just saying if it gets to that point, then you would look to the downside. And if that was the top, if we got there, if we hit that fresh all-time high by $1 or $2, then look to your 50% level. And right now, if that was the case, it would be right back where the 42K level was, where basically the ETF hype got to its extreme there, hitting that top at 49. We had the distribution, the pullback, and then the pump back to the upside. So that would be if the top was 69. If we landed somewhere where we were now, we don't know yet, haven't got the closeout yet of the week or the month, that would bring us back down to around 36.5. Still all pretty reasonable areas to consider that the bull market could continue, but with a huge, huge but, it could be several months of consolidation before we see a final pump to the upside. Remember, going back to March of 2023, if you weren't here, do remember this, March to October, that's 7 months. 7 months. The market took 7 months to consolidate between $25,000 and $30,000. 7 months, people. So if we did see something like that and the market basically just died off for half a year, 7 months, maybe longer because of how significant this pump has been, it doesn't mean that the bull market is over. It just means it needs some time to consolidate the move that has occurred. And if that happens at a higher price, especially above key support levels, like we can already see on the chart beginning to form, and the key 50% level of the range, wherever that top comes in, that just means that there is still some more gas left in the tank to push us to hopefully fresher prices above, or maybe even come back and test that previous high. Similar to what happened in the previous cycle. The market declined roughly 50%. It wasn't able to close under those levels. So that was another big key here. If we look at the 50% from last time, on the monthly, it didn't close below the 50% level. It pushed down on price, but came back above, closed above it. So that was a very key moment there for the markets. Then they pushed away again to new fresh highs. So that's a look at one pattern, the double top, how it can play out, how it can still be strong, but also look weak at the same time because of the amount of time. People get really hung up on the time of the market and they just think that it's over because nothing's happening straight away. They want shit to go every single day. This happened last cycle as well. Left-hand translated cycle talks were everywhere for June and July of 2019 before we had 6 months to the downside. 1, 2, 3, 4, 5, 6, tiny little upside, quick flush out for COVID, and then the market takes off from that point. This happened exactly the same last cycle. It was a little earlier, but the same feelings were there. This left translated cycle, it was all over, and we were going to go down for years. I bring that up because of our 18.6 year cycle. I think the odds are better for a left translated cycle next cycle because of how long this depression, this recession, crash, collapse goes on for real estate, for the economy, for stock markets, and of course, Bitcoin and crypto. Who's got money to spare to get degenerate on altcoins and crypto when markets are really coming down hard? Something similar to what we saw in the GFC of 2008, which lasted for many years from that point. So for BTC, that was one particular pattern, looking at the double top here. Cup and handle also comes up. I'm not going to get into that now because we've got plenty to cover also with the left translated cycle, but just in terms of the price for Bitcoin right now, it's at $87,500 against the Aussie dollar. And just take a moment to see how crazy this is for Ethereum. It's nearly at 5,000 Aussie dollars here, 24% away from a new all-time high at these tops. So back to BTC, quick break looking at the markets around the world as they do head into new all-time highs. We'll get very close to it. Bitcoin USD left translated cycle. What is this? We're looking at 4-year cycles, but not the halving. I stress that. The halving thing I think is done. I don't care for the halving thing. It doesn't make sense to think that the market's always going to do the same thing every single halving because most people know about it and you get that pump and the dump, right? Doesn't mean it has to go to a new all-time high after the halving every single time. It may do it this time, but to think that it has to happen like that every single time might be setting yourself up for failure. What we're looking at here is the left translated cycle and breaking down the cycle into rough 2-year blocks, low to low. So that's what the left translated cycle would be, or basically the 4-year cycle, and then you split it up with a left and a right. I've got left here, that would be your right side, this is your left side. The simplest explanation here is if you get a top in the left side of the 4-year cycle, that is weak, and you would spend the rest of the time coming down to get to your low by the end of that 4-year cycle. Now, the same thing occurs on many, many different time frames. If it runs up too quick on your daily chart and you're looking at a 60-day cycle and it runs up within 15 days, it might spend the next 45 days coming down. Now, it's up to you to see where those lows come in for the price. If it remains higher, well, then you've got a higher low forming and just needed more time to consolidate before it starts to run up again. If it breaks down from that low, so you run up for 15 days, come down for 45, then that's a weaker market because it's breaking down from those lows, which means that next run up might be weaker. That's not what we want to see here. So if we are to get a push to new fresh highs and we start to break down, that's why I brought up the double top and having a look at those 50% levels, because that could give you a key insight to what happens next. So if this does peak, then have a look out for the timing of where that low comes in. And if it's able to put in a higher low on the swing chart to then show us whether that strength is coming back into the game and it just needed more time to consolidate, to digest the move that it's had, because it's been a pretty significant move to the upside from $25 to now $57,000. So what happens if the left translated cycle does occur? How do we know that? There is a good signal that you can look out for, a nice clean one, which is your monthly swing bottoms. I'm using the TIA GAN swing indicator. There is a link to this top of the video description, 7-day free trial. You can check that out right there. Now, in terms of this signal here, this lets you know when the trend has changed on the macro cycle. The point being, for the macro, you need to let macro signals take time to play out. You're not going to know after 1 or 2 days or even a few weeks. It could take a few months before you start to see the market come down, bounce, and then break down from those monthly swing bottoms. And from that stage, then you have a much stronger signal that the cycle is over. that we're going to see lower and lower prices. Remember, that's still going to be enough time for most people if you are open to seeing those signals, because remember, the masses kept holding on and holding on and holding on, and then eventually most people sold out in June and November. They sold out at the bottoms rather than just sort of selling the breakdown of roughly $35,000 to $40,000. A long way from the top, I hear you in that case. But the point being is that you have a macro signal, and it takes time to see those macro signals play out. Now, there are ways to get in closer. It's going to take a little bit more experience. We can cover those on the channel. Hit the like and subscribe button so you stay up to date with those in case we do turn out to have a left translated cycle. Now, on top of where we sit, if we were to come up, start to break down, that would be game over. Breaking of that swing bottom, game over. But what if we do hit a new all-time high? What about coming back and just consolidating at or above old all-time high prices? I've got a line drawn through here, roughly mid-40s. Now, I'm using mid-40s because that's where we've seen resistance in the past. We saw it at roughly 48K at the monthly swing top. We saw it at 49K for the ETF top. We saw it at the 50% level at $42,000 as well. And so if we are to push up before the halfway point, that halfway point, November 2024, if we saw a top before November 2024, I think even a consolidation above roughly around this 50% level, if that is still the 50% after we get a top in, roughly around the mid-40s for easy numbers, then that could still be enough for us to keep pushing up and break back past that top and give us a right translated cycle, which is very similar to what happened in 2019. We had this big run up. The market then took a while to digest the move, come right back. Sure, we had the pandemic, wasn't a lower low, good high low there, and the markets then closed back above this particular low right here, and that gave you the next part of the move. And so if we saw something similar to that, watch where this correction comes into. If it starts to get too low, then of course, probably not going to see this thing bounce back to fresh highs anytime soon. But provided it's a healthy consolidation, which can take a little bit longer because the narratives seem to be, well, might be running out by that point, then you'll need a little bit more time to develop another narrative. It could be the same ones, but just getting bigger, something like the ETFs, right? And right now, these are the narratives that we have going on. The halving, of course, coming up in 6 or so weeks, and of course, ETFs buying Bitcoin. Something else on the point of ETFs buying Bitcoin is that they can't easily flip that Bitcoin to altcoins. So maybe more of that stays in Bitcoin this time around and trades between BTC and fiat, or essentially fiat, because that's all in the ETFs. And I was going to say stable coins, but of course not. So you've got the halving, you've got the ETFs buying Bitcoin. Can't convert into alts this time. Maybe we do get a much bigger pump this time around. So Bitcoin still has the possibility to run up extra hard to the upside, considering where it sits. Now, in terms of this halfway point for the 4-year cycle, we're about 8 months away now. If you look to November and a couple of days away from March now, that gives us 8 months. So there is still a fair bit of time to go before we could see that final peak. But if it does happen on this side of the 4-year cycle before November, well, that's a left translated cycle. That's what that is, that's the meaning of the left translated cycle. But I think there's still another couple of points to watch out for, and that would be the correction. Where does that come in? How long does it last? And do we start to see some strength form in that base and start to break its way higher again in the right side of the cycle? In that case, well, we're back on for a right translated cycle, meaning we would have that shorter bear market, and then maybe we see the left translated cycle after this particular one, which I think works reasonably well with the timing here. If we get that peak in 2025, maybe it takes a year to die off and we get another final peak in 2027. That would be quicker than what we typically see, and that would lead into a longer, drawn-out, multi-year bear market that coincides with the rest of the markets, the rest of the economy, real estate, the economy, the stock markets. So that's a look at the true 4-year cycle, the low to low, measuring where the peak comes in, and of course gives us an idea of that potential bear market, whether it's going to be a 1 year, 1.5 year, or a multi-year bear market. Now, I've got plenty to cover with Ethereum, altcoins that continue to break down against BTC values, which could be coming into some nice DCA areas, the likes of Link as well, which I had to cover for you guys. But I think that's gone on long enough. Hopefully you can use that to your advantage during this cycle, bookmark it, save this video, use that section on the left translated cycle. Join us on Twitter, as I'll be posting more over there as well. And of course, the sale going on for the next 48 hours. Check that out. Links in the video description. Thanks again, guys. Have a great day, and I'll see you at the next one. Peace out.